Red is the color of Christmas, but it's also the color of your portfolio this week, today, and, for the most of the month of November. Welcome back to Writer's Room by Blockspace. Today, we are going to be doing a market recap on the blood that is in the streets between Bitcoin, AI, and basically everything except for gold right now. So if you've been wondering why Bitcoin is selling off and why tech stocks are selling off, even after NVIDIA had a banger earnings report, this one's for you. You're listening to Blockspace.
So, Colin, you just said red's the color of my portfolio and Christmas, but Colin, what's the other color of Christmas? It's green.
Yeah, that's right. It's kind of a funny irony there. So we could do this either way. If
we could just cut the episode right there, because basically what we're going to do is we're going to gang up, we're going to punch down on everyone's portfolio. No one is safe. We're going to lead by punching down on the Treasury companies. We're going to punch down on AI. We're going to punch down on friends of ours who run, these publicly traded companies, because misery loves company. This is the anatomy of the Bitcoin crash of fall 2025.
And this is an exercise in masochism as well as schadenfreude, because you cannot criticize this industry's price performance and work in it without recognizing that you too are down bad over the last few weeks. So I guess, should we just start with what the hell is Bitcoin doing?
Yeah, what the hell is Bitcoin doing? So this is Thursday afternoon, November 20th, 3 p.m. Markets are closing. The boring boomer markets are closing, but Bitcoin still trades, and that is going down. Bitcoin's at between 86 and 87K right now, which means we're red for the year. Bitcoin is down on the year. The hurdle rate for Bitcoin this year is negative. So, just buy maybe fiat and you would have outperformed Bitcoin's hurdle rate this year.
Yeah, I mean, that's been a kind of a talking point with a lot of Bitcoin bears, right? They're like, what's the point of you even owning this thing if it's not going to underperform the market at a time when euphoria is left and right and your grandmother is aping into the hottest AI tech stock? But as you can see, we've got the 30-minute view here for candles on Bitcoin, and over the last month, it's just been nothing but down. This sell-off, I think, caught a lot of people off guard. I think a lot of people were expecting us to test 100K again, but breaking below it was something that surprised and caught a lot of people offside, and it even led to speculation from a number of analysts and traders that this might have been a large fund or some single manager getting wiped out. Because if you just look at the kind of structure of the liquidations, it might indicate that someone's trying to deleverage their position because they went underwater.
Yeah, maybe you see tweets that are like, someone got carried out today.
Yeah, yeah, exactly. And so, whether or not this is someone getting washed out or just typical for Bitcoin's price movement, I think it's worth noting, as so many bulls on Twitter have, like friend of the show, BitPain. He's basically said it's like he's getting texts from friends and family about how panicked they are because Bitcoin's down, just keep selling off. And this just comes with the territory, as he says. And I think that's been a rough entry for a lot of newcomers in class of 2024 and 2025, especially the ETF holders, whose average purchase price is underwater now too. This is just an absolutely spectacular show of volatility. And it has a lot of people spooked, but it's what Bitcoin made its name on. It's why people were so wary to even invest in the first place. This drawdown is 100% within the range of historic drawdowns. Whether it signals that we're actually in a bear market, I think, is what a lot of people are curious about right now. Because the 30% drawdown in the other asset is like, this is over. You're selling it for the next year. It's not going to come back up. But Bitcoin has suffered 30 to 50% drawdowns in 1 month and then 100x over the next few months. So I'm not saying it's going to do that. But my point is here is if you bought this ticket and you aren't comfortable with this, then maybe you should get off the ride.
Yeah, that's true. If you bought the ticket, you know what ride you're getting on. I think a lot of people's entry price is probably over 100K now. I had Alex Thorne on the pod a week or two ago. He said according to on-chain data, according to Checkmatey, our favorite on-chain scientist, a lot of folks, their cost basis is mid 90K. So that means we're in a pain point right now. Holders, the average holder is negative. I think there's some holders who may have Yeah, there you go. There, according to Jim Bianco, the average spot BTC ETF holder is now in the red. So that means your average boomer parents are wondering why their IBIT went down.
And this is an interesting chart because if you look at the launch of the ETF in January, it was underwater for basically the entirety of 2024. Let me clarify that. It was underwater for a good quarter more in 2024, as you can see on this chart. And then in the Liberation Day sell-off in April, it touched that average cost basis trend line and then bounced. Be curious if we see a bounce from here as well.
I do wonder, like, I see most people charting, like doing TA on like the Bitcoin chart. They need to be doing TA on the IBIT chart and the IBIT like cost, average, cost of Bitcoin, because that's really the people who are in the driver's seat right now.
Yeah, and I think it's important to also point out we had Blue Masalari, the head of digital assets at T. Rowe Price on a while back, and she made the point that these ETFs have kind of changed the investing timeline of some of these investors, and also have changed the market structure of Bitcoin, because now these are being held in passively held instruments in people's 401ks or retirement funds. So they're not touching this liquidity. They're not treating this as the same liquidity as, say, a trader, obviously, on a crypto exchange. I'm curious how many of them never check their 401ks, though, and how many of them would be the kind to look at it and see that their IBIT position is down 20 to 30%. And that's going to be enough for them to want to cycle into bonds or something safer, right? Maybe these are younger participants in the economy, younger workers like our age, who have rolled their 401ks into Bitcoin and they're bullish anyway, so they're not going to really touch it. But, it raises questions as to how have the ETFs changed Bitcoin's market structure fundamentally, and how much do these sell-offs either aggravate or encourage that investor base in terms of their long-term valuation of Bitcoin. And just to go back to the Jim Bianco thing really quickly, that trend line where that average price is, obviously you can go below that. That doesn't mean that it has to bounce from here. But these are indicators like these can sometimes be good to show that, like, we're getting to a point where maybe sellers are getting exhausted. People have been saying that for the last week, so maybe that's not true. But I want to get another chart here from friend of the show, I wish, Zero Hedge.
Yeah, Zero Hedge. If you want to come on the show, please let us know.
I'm a friend to any libertarian adjacent blog that is owned by Russian oligarchs. So here is Zero Hedge's. Here's a Zero Hedge tweet: Bitcoin most oversold in over 2 years. This is looking at the RSI on the 14th day, I believe. And I'm unsure if this is what terminal this is from, so I couldn't source it myself. But it shows here that Bitcoin is the most oversold it's been since August 2023. These are the types of indicators that I think most traders like to look at when they're looking at good entry points. Now, again, this doesn't necessarily matter if something changes in the macro outlook. We'll return to that at the end of the episode in the next few weeks. Like with COVID in 2020, if there's a liquidity shock, Bitcoin is going to be the first thing to drop to the bottom because it is hyper liquid. It trades 24/7. You should also expect that if there's a liquidity crunch. Part of the fears with what's going on right now is the credit cycle. People are wondering, is the credit cycle taking a turn where we are no longer going to be flushing fresh liquidity into AI builds, markets, things like that? But the fact of the matter is, if you're looking at an asset that's been oversold at the highest level in over 2 years, to me, that would, if you have high enough conviction on that asset over a long enough time frame, that should be a good entry for you. Now, this is not financial advice. Again, Bitcoin can get cut in half again tomorrow. Anything can happen in this market. But to me, this whole sell-off, there's nothing fundamentally to me that seems to be driving it other than jitters around the general economy and the AI bubble, which fair enough.
I mean, you say AI bubble. Sentiment vibes. My degen discords are getting quieter. Even the active ones that have survived to date, are flipping bearish. So, maybe this is the beginning of a new bear. What's funny is, like, that didn't feel enough like a bull market to me. So I think that's probably why I'm a little skeptical. Like, I just listened to a great interview with Luke Groman on Preston Pish's podcast, where he's pretty bearish, pretty frightening words about, like, the state of liquidity crisis, and, like, what happens if things break. And, the thing is, there's a billion of those types of Bitcoin podcasts, but it's really, you don't really get Luke Groman being like saying those things in a more urgent tone. So it's hard though to imagine the AI bubble popped when Nvidia just yesterday, Wednesday, beat earnings by a substantial amount. And in fact, this morning, again, Thursday morning, all the headlines were Nvidia beats earnings, pushes all the markets up. So like for just a few hours this morning, we had like some hope. Like we were like, oh, great, Nvidia, which is basically the market. They're doing great. So, but apparently not enough because as of right now, things are down.
Yeah, they had a $900 billion round trip on their stock price. I want to pull up this tweet here from one of the macro accounts I follow, Endgame Macro. He's got some good analysis. He quotes this Kobayashi letter that shows this a $900 billion round trip, $450 billion up at the end after the Q3 earnings call dropped, and then minus $450 billion in market cap after the market opened today. And what Endgame Macro points out here, who knows if this is the sole driver behind this, it makes sense to me, is that the rally basically ran into a less than optimistic jobs report. So reading from this post right here, what makes that $900 billion round trip in NVIDIA interesting is that it lines up almost perfectly with the shift in macro, not anything about NVIDIA's business. First leg up is easy to explain. Stock blowout Q3, blah, blah, blah. The second leg, the give back, starts once the jobs report lands and people actually process what it means. The data showed a labor market clearly losing momentum with softer hiring and weaker revisions, but not an outright crack. In other words, growth is cooling, margins will get harder to defend, but the macro picture isn't bad enough to guarantee another big helping of monetary support. Rate cut odds for December shifted towards hold, and suddenly the backdrop that justified paying any price for the longer duration growth stopped looking so friendly. So I want to go to the jobs report really quickly before I just touch on a few of those points. This is a CNBC article for it. Doesn't look terrible at first glance, 119,000 jobs added in September, but a few things. This is November now. Obviously, this is delayed because of the government shutdown. So 119,000 jobs added in September, nice, but perhaps for most investors and traders, that would be better if that were coming in for the October job report, which we may not get. We don't know. And then you could see some job reports while the government was shut down from firms like, I think it's Challenger, Gray, and Christmas, that showed a private sector report that showed a much weaker job market than what we've seen out of the Bureau of Labor Statistics. The government lying about data, absolute shocker. Doesn't matter what administration it is. But the other key point here, and then I'll shut up, Charlie, is unemployment edge to 4.4%. And this is coming after a revision in August of 4,000 lost jobs, even as the September jobs report beat expectations. So kind of the basic idea of Endgame Macro's post is like the job market is showing signs of weakness, but not nearly enough weakness to show structural breaks that would necessitate the Fed injecting liquidity or stepping in as a lender of last resort. And we've seen this in the CME's FedWatch tool. I believe right now, last I checked, the December rate cut expectations had fallen from a consensus that they were going to cut the Fed in December down to a consensus that they won't, that they'll probably hold. Now it's a 60% chance of Fed holding rates next month. So like the basic idea is that people were, what Endgame Macro is saying is no one really wants to ape into NVIDIA if they're not sure that there are going to be continued liquidity bumps that will inflate the bubble even higher. It's like they're basically saying maybe NVIDIA is at a fair price right now and we don't need to continue bidding it up. I could be misunderstanding it, but the basic idea is if you have the softening job market and the Fed isn't really ready to step in yet, then you're looking at more headwinds than tailwinds.
We will have to see. I mean, Jerome Powell has 8 months left in the seat. And I don't know if, I hear people say that, well, it doesn't matter who's, the actual person driving the Fed, but those interest rates, if they stay flat, could mean it's like the groundhog seeing his shadow, basically. 6 more months of.
And, I kind of fall in the camp that we should probably be at higher rates right now and break some things in the system and flush it out. Because the not to get too macro on it, but if we lower interest rates too much, then you blow out the long tail of the yield curve on bonds, and investors are going to expect higher interest rates on longer duration bonds because they're expecting the currency to devalue in the near term or long term. So like Trump can drive down rates, but that means two things for the consumer. Like driving down rates means that there's something structurally wrong in the system, and that usually indicates a recession. So that's not good. And then any sort of liquidity bump that you get from that will be delayed, right? It'll be, maybe a few years down the road. It doesn't automatically end up in the market. It doesn't automatically buoy asset prices. When the Fed started quantitative easing in 2008, we entered the worst recession since the Great Depression. So anyway, all that being said, it's not a guarantee that your favorite coin is going to pump. The other thing too is like it just exacerbates all the problems that Bitcoiners talk about. If you manipulate the interest rates low enough, if you manipulate interest rates for long enough, you can't delude the market on what you're doing to the currency, and investors are going to demand higher rates on those bonds. So Trump didn't create this mess, but I don't really necessarily have confidence that he's going to be able to appoint a Fed chair that's going to get us out of it, as maybe none of them would.
Yeah, it doesn't matter who's in the hot seat.
Yeah, probably not. Unless it's like a Volcker type that's going to do the incredibly unpopular thing and do what needs to be done to make sure that the United States doesn't just absolutely blow itself out of the water.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Let's single out some names. Let's see who might be getting carried out here. So there's one of my favorite tweets. This is unfortunate. Shout out to our NAKA friends over there. I feel you. So NAKA was late filing its quarterly report for whatever reason. One, like they had some switch up, they had some changes of the guard of who produces these things. David Bailey mentioned this in a tweet, but then also like the quarterly report definitely didn't look good. Their stock price is down 50%. I mean, over 50% now, I think, from the where the PIPE investors got in. So everybody's down. But here's a crazy tweet from Joachim Book. For anyone wondering, NAKA's cost basis after selling coins, if they would be exactly the Bitcoin all-time high. So for context, NAKA has 5,000 some odd Bitcoin that they purchased, and their cost basis for those Bitcoin is close to the all-time high. It's like the classic Bitcoin bull story. Like you're directionally right on a long timeline, but it really does become an execution game. So
do you want to know what that cost basis comes out to?
What is it?
$126,000, 203 per Bitcoin.
That's literally
$203,000 per Bitcoin.
That's literally the all-time high. Amazing.
That is crazy. Okay, David Bailey just gave a new definition for aping the top. I mean,
like you thought Saylor was the king of like buying and then it going down. Poor, David Bailey. My heart goes out. A lot of people love to punch down on him. I only like to do that high five while he's drowning type thing. It's like a joke. I'm joking. I'm kidding. But like,
Well, I think we just want to see. I'm not rooting against David Bailey or any team. I'm an alumni of Bitcoin Magazine.
Yeah.
I'm still close to a lot of the team. I love those guys, but I just think people are frustrated. They want to see something better than this. Like this is someone who not only built, and let's give props to the guy, right?
Like the most important Bitcoin media company, the most important Bitcoin media company, the most important Bitcoin conference has defined like a lot of the pretty much like the Bitcoin culture. Like you could probably trace it back to the David Bailey universe.
For better or worse, depending on what side of the argument you fall on, David Bailey has been front and center of a lot of the discourse in Bitcoin and driving forward the media conversation at a time when most people thought Bitcoin was worthless. And so I think people are frustrated because this is just a bad look in general, right? Like, whatever your politics are, the kind of like Trumpian crypto boondoggle stuff that David Bailey has been implicated in Not saying he did anything wrong, but like people associate him with Trump and with the Trump's making a lot of money on crypto. And I don't think people outside of the industry realize how bad stuff like that looks. And then you have a company that launched and is down like 99% to do a Bitcoin Treasury strategy. It's just the whole thing looks awful. And it's just another kind of PR loss for Bitcoin. I don't think it's insurmountable, but at the end of the day, and this isn't just NAKA, right? I don't want to punch down on them. The whole Treasury bubble thing got ridiculous.
Yeah.
It got absolutely ridiculous with how much money people were raising to buy Bitcoin and no one asking whether or not this trade had run its course.
Well, a lot of people had been asking. We talked about it on this podcast, but like, look, I entertain all the people involved. I had my boy, Steven Lupka, on this show this summer. Great, fun rip. But like, yeah, I mean, everybody with like half a brain knew that this is a bull market strategy and it was really juicing, like really leaning into the bull market. And it has not been a bull market since. Like, had Bitcoin gone up since the Treasury boom of late spring 25, like maybe we'd be having a different conversation of, death to bears, which I'd be first and foremost out there also carrying the banner. But this is the thing. It cuts both ways. Is it levered Bitcoin or is it levered, reputation? Because that's kind of almost more what it's like. Now I will say a point of clarification about that cost basis for NAKA's Bitcoin. That's just the Bitcoin that Nakamoto has bought. Now they have like interest in other. They like part of their meta is that they're saying that they're the treasury company of treasury companies. So it does not include the Bitcoin of the treasury companies that they are parent or have interest in. But one of those companies, I want to bring it up, is Metaplanet, otherwise known as 3350. So if you can see here is when the narrative that Metaplanet's becoming a MicroStrategy of Japan starts heating up, February of 2024, and it was an unrelenting rise from 16 per share all the way to a peak of 1,921. Now they issued some stocks to drive forward that increase, but that actually propelled Bitcoin Inc., or rather UTXO Management, the fund arm of Bitcoin Inc., to be one of the most profitable funds in the world of 2024. Because of their giant position in Metaplanet and similar type strategies. But really since June of 25, which was like literally the peak Bitcoin treasury season, early June 2025, Metaplanet has had 4 green weeks? It's just been this stair step, unrelenting down. And that kind of tells the same story most places you look, except the other treasury companies really have never, most of them, if we were to pull up their charts, the ones that do have charts, didn't get to enjoy those first few months or years of cult narrative creation of the stocks growing up. You've got here another good overlay chart of a lot of the Bitcoin treasury companies.
I mean, this is just crazy if you look at it, right? So this is Metaplanet right here.
The pink one.
The pink, like magenta. This is terrible color. Like these NAKA and Metaplanet look too similar. Anyway,
yeah, so if you're listening, it's really difficult to tell what's happening. But it's a chart showing a bubble, and in May of 25, and everything going down and to the right.
And year over year, in May of 25, Metaplanet was up 2,600%, and now it's still up on the year 40%, beating the S&P, I think. But the only other one that's up is also for the cohort that I have is Strive, and then Bitcoin's down 6%. RIP. NAKA is down 47%. Strategy down 60%.
Yeah, ouch.
That's wild. So yeah, I mean, it's just I want to zoom in on something you said about UTXO Management, BTC Inc.'s liquid fund. They also have a non-liquid fund for VC, but their liquid fund, their single manager hedge fund, was the most lucrative single manager hedge fund last year because of the Bitcoin Treasury strategy play. And it seems like, obviously with NAKA, they rolled that trade into this year. And everyone, I think, including the investors and anyone who's getting excited about these things, they didn't think that the peak for 2025 is going to be 126,000, and it may not still be, but like it's kind of looking like that was going to be that yearly high for Bitcoin, right? Most people were expecting at least 150, if not 200. As always, bull market expectations are wildly outpacing reality. And I just come back to, wasn't the whole point of this industry to try to get away from leverage and the dangers of rehypothecation? I mean, you can't obviously totally restrict credit, but the point being is like Bitcoiners used to harp against unnecessary debt, against overly leveraging. How many funds have we seen wiped out in the last 3-4 cycles because of leverage, right? And so I don't know. I just think this whole thing will be looked back on, obviously, as like one of the most insane moments of collective disillusioned euphoria, because it's just a leverage play on Bitcoin, man.
It's like it. The funny thing is, like it's very easy to like look in hindsight and be like, wow, that was never going to work. That was always going to go down. But I think we actually did like express clear skepticism at the outset. Like we have the receipts. Like you and I had the same conversation, I think in like June or maybe May, where we were like, hey, look, we want everything to go up. We're rooting for you guys. But man, it's like very clear. You don't have to be that seasoned to look at that strategy and realize that it is ambitious, to say the least, and risky to be soft. So
yeah, and I think that most people are underestimating what happens when these companies no longer can access the capital markets that they did before to fuel Bitcoin purchases. I don't know this for sure, but Matthew Siegel tweeted recently that a lot of the convertible notes that we've seen from Bitcoin-related equities, specifically the Bitcoin miners, are underwater right now. The value of those notes in the resale market are taking a significant haircut because there's general fear over whether or not the conversion price is going to be attained when those converts are converted, or if the company is actually going to be able to pay back the debt on the note if the conversion price isn't attractive. A convertible note, for those who don't know, is a way for a company to get low interest rate debt, and then there is a maturity date on that debt, and the debt can either be redeemed for shares at a predefined price, or it can be paid back in cash. But so if the convert market is underwater for some of these companies, I wonder, it's like, is MicroStrategy or some of these other companies going to be able to actually access debt, or are they going to have to lean on selling their equity? Like Strategy has a bunch of at the market offering, or billions of dollars still left in its strategy at the market offering for its common stock. So at the time when they really should be buying Bitcoin, you wonder how many of these treasury companies have enough dry powder around or can even go get capital to take advantage of this sell-off.
I mean, Bitcoin 87K at the time of recording, Thursday afternoon, November 20th. We have dissected a little bit the anatomy of the collapse so far, Colin. We'll pull out a couple more data points. One is, we do a lot of mining content under the Blockspace brand, do a lot of mining podcast related stuff. And so for you, those of you who don't look at the mining metrics, what's called the Hashprice is at an all-time low. This is the price per unit of hash rate. So you buy those computers that mine Bitcoin, and they produce X amount of hashes, and you get paid in Bitcoin for those hashes. The unit price of each one of those hashes is the lowest it's been. That's called the hash price. And that's due to more people mining than ever and Bitcoin going down. So there's your other metric. I want to point people to our newsletter. We're going to be documenting a lot of the interesting dimensions of the things that we talked about here, Colin and I, including a little bit about hash rate here. Probably, if you're listening to this Saturday morning or Sunday over the weekend, look at our most recent newsletter, blockspace.media or newsletter, or blockspacemedia.newsletter.com. Read that. We'll be writing about it. So
yeah, Charlie will be breaking down the hash price bear market, and I'll be looking at NAKA's 10Q for their first quarterly results as a Bitcoin treasury company.
Yeah. So we don't want this to be too much of an I told you so to everybody, because I want David Bailey to make a lot of money, because David Bailey's way more fun to hang out with. He throws better conferences when the price is up. The cult is a really fun cult to be a part of. And so, we're rooting for everybody. But same time, liquor, ladies, and leverage, those are the things. And this is for a leveraged Bitcoin play, it cuts both ways. So, you got any final thoughts on this market?
I don't think treasury companies are dead.
Yeah, me neither. I'll say that.
I think that max pain for this cycle, as others have pointed out, will be when treasury companies get washed out. Yeah. And maybe that doesn't come, but in a liquidity event like we saw in COVID, it's hard to see some of these companies being able to survive an insane drawdown if they're already treading water. But who knows? I'm not here to forecast whether or not these will die. And like you said, I want nothing but the best for these companies. I just hope that we learn some lessons. Like, euphoria always spoils the party. So, don't get margin called. That's my final thought. Don't put yourself.
I could totally see that the treasury companies get put on the absolute ropes, scrape the last penny from under the seat cushions, and then barely survive this. Bitcoin rips everybody brain holes, this event. And then in like 3 years or 4 years, when the other shoe drops, then we all go, dang, wish we'd been more disciplined or something. I don't know. But until then, there may be some sabers opening champagne, and I'd like to be there. Make sure you invite me to those parties, and we'll have a good time. Thank you so much for listening to the Blockspace podcast. Subscribe, like, give us a review. Tell us if you hate us.
Let us know what topics you want us to cover.
Yeah,
we do this for our wonderful listeners. We appreciate y'all sticking with us week in and week out. So if there are any things that we cover that y'all like, that y'all don't like, let us know. We're always open to user feedback. We want to make this the best show for y'all.
Otherwise, catch you next week.